So you probably heard the word escrow get thrown around a lot. And I am going to explain what escrow is, or I'm actually going to explain what the two escrows are, because you probably hear escrow, to make it as simple for you to understand. And I'm excited about this video because this is a question we get asked all the time. So you're going to hear escrow when you're trying to buy a home. You're going to hear escrow when you've already closed on a home. So what's the difference? Well, let's start with buying a home. When you buy a home, let's do it like this. You're buying a $100,000 house, and you say to the seller, I would like to buy a $100,000 house. I would like to give you $100 in escrow. Okay. Now, before we go any farther, yes, different states have different things. We're just talking about right now here in Hillsborough County when we use title companies. I'm willing to give you $100 in escrow, which is a binder for the contract. And this $100 will go to the title company. So first, the title company is in between buyer and seller. Whoever hires, it doesn't matter. Buyer can hire, seller can hire. For example, the title company does not work for either person. It works for the deal, right? They're just like Switzerland. They say in the middle, they take the $100 that you're going to give them if the seller accepts, right? And they say, yep, we'll accept the $100. And it goes into an account. It's like a binder. It just stays there. Okay. So here's your escrow that you sent over $100. Now it stays there. The escrow money is going to do a couple different things. It's going to stay in the title company. And if the deal falls apart, whether the inspection goes wrong or something goes wrong with the financing, and it states that the buyer is allowed to be refunded, the title company will give back the escrow to the buyer. If something happens and the buyer deal falls through, but they were out of their finance contingency and they were out of their, home inspection contingency and they were at fault, then the escrow will go to the seller. Okay. Now, before I move forward, the title company, remember, does not work for either party. So legally, they cannot just give the money over. There are steps in which this takes. Hence the reason we'll do separate videos. And there is a lot of attorneys out there that can comment below and say, this is true. You can't just hand over the money. But so we'll start again. You put the deal together, you write the contract, $100,000. I'd like to buy your house. I'm willing to put $100 in escrow. Seller says, okay, you have X amount of days, let's say 3 days to get your escrow money over. It gets into the title company. It sits in their non-interest bearing account and it just stays there, right? If the deal falls apart and buyer is within their period, they get it back. If for some reason they fault out and they're not, goes to seller, okay? Now, the escrow, like I said, is just a binder. And what will happen, it will sit there. Now, let's say at the end, you're finally going to close and the bank's doing all their due diligence. And they say, okay, buyer, between your closing cost and your down payment, you owe $1,000. But since you already have that $100 in escrow, we minus that and you have to wire over the remaining balance of $900. So your $900 will go in. It will go with this. Now there's your $1,000. It will sit in the title company. And there you go. You close. And now the escrow money finds together with your down payment and closing costs or whatever you have to bring to the table. And there you go. You closed on a house. It's that simple, right? So obviously we can go into detail more in separate videos on how escrow is refunded or lost. And we can do that for a separate video. That's how easy the first escrow is. Now you bought a house with a loan. We're not going to talk about cash deal. That's different. You bought a house with a loan or a lender, bank, whatever. And now there's another escrow word you're going to hear. And this is what this is. So every month you have a mortgage payment, and your mortgage payment that you're paying is your mortgage and interest, your homeowner's insurance, and your property taxes. Okay. Now, what will happen is when you send this in, the mortgage company will take theirs, and then they'll take your taxes and homeowner's insurance, and they will put that away in an escrow account of theirs, and they will hold on to it. And at the end of the year, as they collect more of insurance and taxes, and they keep collecting, right? What they're going to do, and by the way, I'm not flossing this money. I just literally had it laying around. Okay. At the end of the year, the mortgage company will pay your property taxes, and the mortgage company will pay your homeowner's insurance. And that's what an escrow account is. And you might say, what about escrow shortages and everything? For a separate video. I wanted to keep this one very simple so you can understand the difference, right? And of course, I'll do separate videos on escrow shortages and why it happens. So remember, the first escrow you hear is a binder, which goes to bind the contract. And the second escrow is an account that your bank has. So when you pay your monthly mortgage, and interest with your homeowner's insurance and your taxes, and it goes to account, and your mortgage company or bank, whatever, will pay your taxes and homeowner's insurance. Again, we'll do a separate video if you buy cash and how there is no escrow account. We'll do a separate video on escrow shortages. We'll do a separate video on all this, but a simple video to help you understand. And I hope I kind of made it as simple as possible for you to understand all about escrow, and hope to talk to you soon. Keep following for all your real estate education.